Good morning. Today is Monday, January the 22nd, and the time right now is 8 in the morning in Singapore. And this is going to be a very busy week because we have a slew of major economic data that will be released today, starting this morning with the People's Republic Bank of China reporting, deciding on their interest rate policy, which is the China Central Bank. Tomorrow, we have the Bank of Japan doing the same thing, followed by the Bank of Canada on Wednesday. And then on Thursday, we have the ECB, which is the European Central Bank, all doing their decision on interest rate policy, although none is expected to change the monetary policy stand. Then on Wednesday, we have a slew of purchasing managers index starting with Germany, Eurozone, UK, and the US all on Wednesday reporting their PMI numbers. And on Thursday, we have the big one, which is the Q4 GDP numbers as estimates. Now, we remember in Q3, US reported the GDP to be at 4.9%, which is very, very high for a very mature economy. And this is in contrast to the rest of the world, which has been struggling to get their economy going. So the Q4 number is a major markdown because the market is expecting only 1.8%. Now, if you can imagine from 4.9% to 1.8%, that's a very drastic markdown in outlook. So do expect fireworks to fly on Thursday itself. And on Friday, we also have CPI numbers from Japan, as well as the personal consumption expenditure, the PCE numbers coming out from the States. And this is the number that the Federal Reserve watch to decide if they need to change their monetary policy going forward. And it's like I say, it's going to be a very, very busy week. Now, last week, we saw the Dow Jones charge into new territory. We can see the high traded in the Dow Jones is now just under 38,000 at 37,933.73 in the cash index. And this is actually suggesting we probably will see, at least in the near term, higher prices going forward. And in the S&P 500, after hesitating for 2 years, finally, the S&P 500 also broke free and above the all-time high of 4,818.62, which was last traded on January the 4th, 2022. So on Friday, we have a new high at 4,842.07. Again, we are suggesting near term, we will probably be seeing higher prices going ahead. And in the Nasdaq 100, this is the stellar one. Last year, the whole of last year, we can see Nasdaq 100 led the market higher by rising 53% in 1 year. So you can see that the Friday's movement in the Nasdaq 100 charges forward. And now we have a new high in the Nasdaq 100 at 17,317.21. Again, suggesting near term, we probably will see follow through buying in the US equity markets. In Asia, we can see that the Nikkei is also charging higher. On Friday, we have 36,330, and this is also suggesting that Nikkei is probably will go higher in line with Wall Street expectation. And the only one that has come down this week, last week, was actually the Hang Seng Index. Although we do see tentative buying interest, the low trader is 15,172 in the futures contract in Hang Seng. And we can see that this is actually providing a very low risk counter trend trading opportunity. There is a possibility of a bounce, considering Wall Street now is so strong. There is that possibility of doing counter trend trade. So if you are as gung-ho as I am, maybe you can consider to do something along the same line as me. Okay, immediate target, of course, will be the 16,500 levels, followed by the 17,255 levels. And this is at least a bounce at the minimum. And over in currencies, we can see the dollar, despite being elevated at 103.45 last week, is losing some kind of momentum. So there is the possibility we may see the dollar index pull back a little bit, although the focus is still for the challenge on 104.22 to 104.44 over the medium term. And in the currencies, we can see the euro dollar is also stabilizing at 108.44 with the potential to rise, at least in the near term, to challenge the 110 levels. And focus is still for a continuation of this fall towards the 107 levels. Sterling, same thing, but sterling does look a little bit stronger right now. The structure is very different. The immediate concern will be how the market reacts. If it can actually try to break out these near-term resistance lines, and of course to take out the swing high at 127.85. If that can be done, of course, then the next logical extension of this thinking will be a challenge on 128.27, which I think is highly likely to be broken in the next rally. Over in the Aussie, we can see the Aussie has actually bottomed out at 0.6525 on last week and on Wednesday itself, and prices now is looking to trade higher. I would think that if we can sustain this rally all the way back to 0.67, even to 0.6740, that will be a good area to consider selling again for an extended decline in the Aussie. Dollar Canadian has already come off on the high at 135.42, and this again is on Wednesday. So the prices has been coming down, and there's a very good chance the market will continue to extend lower to challenge the 133.40 levels to perhaps as low as 133.17 before the market continue to extend higher. Dollar yen is very stubborn right now. We can see dollar yen went up to 148.80 and stopped. Okay, so based on this, because this is an area of sensitivity here, 149.05 to 149.45 is an area to conquer, and unless the market can take out this level and close above this level, my thinking is that maybe we will see a pullback to as deep as 144.35. Okay, so look out for a possible dip in the dollar versus the yen. In precious metal, you can see the metals has not been doing exceptionally well, although it has risen from the low of $2,001.90 to as high as $2,039.42 on Friday. But considering that we have rising tension in the Middle East, especially in the Red Sea, where the UK and US military has been conducting aerial bombardment on Yemen, that should actually cause gold prices to rally, because there is that very obvious rise in geopolitics tension in the Middle East, and that is important because it relates to oil prices, and gold has been, in my opinion, underperforming considering the rising tension. So fundamentally, I want to buy, but technically, unless the market can take out this near-term resistance line, it is very difficult for gold prices to go much higher. Even if it can break out this line, the major area to contend will be this swing higher at $2,088.55. So unless market can go higher and close above $2,090, I think the odds as far as technical is concerned could be seeing a continuation of this drop from the all-time high of $2,149 all the way down to challenge the lower end of 1,900. Okay, so do watch out for the possibility of further losses in gold prices. And in silver, we are seeing the same thing. Silver seems to have stabilized, although we have marginal lows, and this is not a very strong signal for the bullish case, because the lows are getting lower, and the low traded last week on Thursday was $22.37. So any kind of bounce, unless you can take out the nearby swing high at $23.53, is likely to see lower prices as a consequence. Oil prices, similarly to what we are seeing in gold prices, has not been able to break out because, like I said, the Middle East is a major conduit for the transportation of oil from the Middle East to the rest of the world, including Europe and Asia. So under such a scenario, it should normally see higher prices than what we are seeing right now, but the market has not been able to break up. So the first level to watch out will be a breakout of $75.21 high, and subsequently $76.14. So unless the market can break out, it's going to consolidate further. At some point, it's going to resolve itself by breaking up either way. Okay, so my bet is to stay long rather than to stay short. And over in Bitcoin has actually started to come down again, and we can see that the euphoria leading to the approval of the spot BTC ETF licenses has actually not resulted in a major explosive rally in Bitcoin. The high traded is just under 49,000, and on Saturday we can see prices actually went up to $40,266 before bouncing. Currently it is endemic. You can see the market is practically flat on Sunday, and the odds is that we may see lower prices. However, if we do get a bounce, I think the top side should be about 45,500 to 46,300 levels before the market unravels again to the downside. So not so optimistic based on the technical outlook for Bitcoin right now. So this is all I have for you. You take care, and I'll come back to you tomorrow with further updates. Bye-bye.